Hello, everybody. My name is Daniel Young. I'm the owner and founder of Adapted Perspective. I believe it's my purpose, my calling to help you identify your dreams and help you reach your financial freedom destination and maintain it so you can pass your wealth on to the next generation. If you've seen any of my past videos, you understand our investment strategy using closed-end funds. Understanding that strategy is key because I'm going to apply that strategy towards sifting and filtering out financial memes. And most of the memes will be trash, though I have found a few decent ones here and there. Reminders, this is an unedited video. Who knows what you'll hear in the background as I film these in my house. If I show our strategy of using closed-end funds, I will briefly explain the system before transitioning back into this meme review. Disclaimers. I used to read off all the disclaimers, but I'm going to instead stick those in the description of the video. And the only one I'll mention here is that I am not a financial advisor. I am a financial strategist. So this is not a closed-end fund review. Instead, I'm talking about filtering the financial advice you see on the internet at large, which does include this review. Pinterest, and then all the pretty financial memes we see floating around. So essentially, as soon as you click on one of them, Pinterest, Facebook, Tumblr, pick your hosting site. As soon as you click on one, the algorithm automatically assumes that you want more. So all of those memes, right? And there are a lot of them. So if you've been watching my videos, you know what I'm about. The purpose, the methodology behind our investment strategy. Using that knowledge and the continued growth of knowledge or the wealth of knowledge allows me an easier ability to sift through all the supposed knowledge floating around. So my goal is not to trash people. I'll use our lens to call out crappy memes and bad advice, but I'm not going to outright trash people who put their information on the internet. I'm not out to slander anyone. I'm interested in separating the good from the bad when it comes to financial advice because none of us want bad financial advice. So, meme reviews. In order to do this, I need to share a screen. So if you head to Pinterest and look for this banner, I mean, yeah, you can type in my handle. This website is no longer accurate. I've removed it, but I don't know why Pinterest has not removed it. But you're looking for this handle, and then if you find me on Facebook or YouTube here, right, it's the same banner. YouTube is just adapted perspective. Facebook is adapted perspective. Navigate your finances, same thing. So if you come here, you'll end up on saved. You'll see all my boards. And this is what we're working on for these financial memes. So if you click that and then go all the way down, you'll see this meme. And I titled them. I titled them for me, and started adding some notes. But I also titled them for y'all. So it's a nothing burger meme, meaning like it looks pretty, but it doesn't really tell you a lot. So, gosh, the only way to have more money, only being singular and only like as absolute, like the only way to do something is now the only way to do something. But if you look at this list, there are lots of ways to have more money. That doesn't work with the title. I like I like the synergy of things. I like the title to match the content. So you can increase income or you can decrease expenses. But that's not the only way to have, I mean, yeah, so you have more money coming in, right? You have less money going out. Now you have profit. But income is not the same thing as profit. If let's say let's say you own a rental property and someone pays you $2,500 a month. That's income between your rent, which is your principal and interest for your mortgage, your insurance, your taxes, right? The mud and utility taxes, the property taxes. If you also include your HOA fees in there, all of those are expenses. If someone manages the property, that's an expense. If you're planning for vacancies, that's an expense. If you're planning for maintenance, that's an expense. If your property has a septic system, that's an expense. If you pay trash, or you pay to have the lawn mowed, or you have general maintenance, like you live on your property is on a heavily wooded lot that needs to be cleaned out every 2 to 3 years, that's an expense. So someone pays you $2,500 a month to live at your property. That's income. But all of your expenses are 2,500. Well, now you have no profit. So you have income, you have no profit, right? But you have cash flow. That increases your income, which does increase the money you're receiving, but it's also not actually leaving money in your pocket. It's paying all your bills, and it's paying all your bills, but it's not the same thing as profit. Now, if your rent is 2,500 and all of your bills, everything is 2,000 a month, now you're making $500 a month. That's cash flow. Okay, still cash flow, but it's cash flow positive. That's profit, right? So the only way to have more money is to increase your income. That's bad advice. Just because you're increasing your income doesn't mean you're increasing your profit. That's different. So based on their meme, so you could get a better paying job. Well, maybe. Depends on your niche. Depends on your profession. Um, as a teacher, I mean, all of that is pretty much the same. I mean, you could switch districts. You could um, pay more money to get a better paying job. But honestly, say I have a master's degree, so I went to school for 6 consecutive semesters or 2 years, and the most I get paid for that is $1,000. That's not exactly a lucrative uh, system that pays me back the investment to get the master's. It's not why I wanted the master's, but that's the system's version of me getting a master's. Uh, you could get a second job, true. Start a side hustle. So if you have a primary income and you get a second job, that's your side hustle. So that's kind of the same thing. You can invest your money. Okay. How? Not all investments are the same. You can invest your money into your bank. That would be a bad choice. At most, banks pay you 0.5% of interest a year. Current inflation is 4%. You're losing 3.5% a year. You could invest your money into a single stock. Google is, I believe, 195 a share. They don't pay a dividend. So if the company goes up, uh, say if it goes up, I'll say it goes up 10% in the next 5 years, since they don't pay a dividend, you're actually losing money every year. Maybe Google, let's see, we can look at this. Hopefully I don't get kicked out. There's Google. I want to say Apple pays a 0.5% dividend and Google pays nothing. Yep, Google pays nothing. So you could own Google, which we can look at current price. Current price is at the most 125. So you can pay 125 a share. Maybe it goes up 10%, right? So we can look at that. So times 10%, you gain $12. Yay. Over the next 5 years, but you lose 4% every year based on inflation. So 4% times 5 years is actually a fifth of your money gone just from inflation. It's not exactly what you want, uh, which is why I like our closed-end fund system, but I'm going to try to stay away from that. Otherwise, I'll be talking on this video for a while. So if you want more information on closed-end funds and how you can use closed-end funds to invest in Google and Apple and Amazon and Berkshire Hathaway and get access to all of these single stocks, but actually get a healthy dividend that beats inflation and blows it out of the water, then look at my closed-end fund videos on the portfolio playlist. So invest your money. So banks, not a great option. High yield accounts would need to be upwards of 7 to 8%. Not every bank offers those. Stock market targeted through closed-end funds is an option. Um, Real estate still seems the best long-term option. Stock market will make you money to a degree, 9% over time, but real estate seems the better option compared to the stock market. You could make a podcast, true, but there's so many different side hustles, right? So they already said start a side hustle. So now they want to add on, make a podcast and freelance, but those are side hustles if you already have a primary job. So it's kind of a confusing list. If you decrease your expenses, well, then, yeah, you have more residual money. You have more residual profits. So you could spend less, maybe, maybe not. Cut the cord. Cut the cord for what? Right? We cut cable. We cut that out. We save $60 a month. Uh, Cut the cord how? Eat out less. Yes, in theory, if you eat out less, you don't spend as much money. Uh, the counter to that is so we splurge like once a week. It's budget. We have a line item in our budget that we call Food Friday, where we go out and eat somewhere. What we found during inflation is if we still go out, but we take it home, so we go out and we get it to go, then the regardless, I mean, water is for the most part water, but not all tap water is the same. If you get a drink anywhere, that's $3, which means you got to drink a lot of it in order for it to matter. But you get a drink $3, and then 18% or 20% on a $50 bill adds up. So if you can still go out but take it home, then I get filtered water at home or whatever I want to drink at home. That cuts down on my spending and our spending. Shop smarter. Yeah, but there's not always a better counter to everything. Compare insurance. That's true. If you've got one of the bigger auto insurances, so State Farm, Progressive, Liberty Mutual, if you've got a bigger company uh, quoting you what seems like astronomical prices, try to find an insurance broker who can look at all the prices and then see if they can give you a better deal. And then I get them every year. But somebody will send me some random, here's what your expense would be on home insurance. And the vast majority underinsure my property. But one of them actually overinsured the property for less than what we're paying right now. And my assumption is that they omitted some of the other coverages we have, but that company is on my call list because if they can match what I have or beat what I have in existing coverage and offer that at a decreased price, then that saves me money. Uh, don't upgrade your phone. I would say wait to upgrade your phone. You don't need, from my standpoint, Now, if you're just running your phone into the ground and you don't need to, that's probably a different conversation. But if you don't need to update your phone every 2 years, then drag out that update unless whatever company is like, hey, turn in your phone and we'll give you the next one free in an actual free, not like, oh, we'll, charge you $50 a month over the next 3 years. Not that. If they take your existing phone, regardless of what it is, if they take your existing phone and say, hey, give us your phone and trade it in, we'll give you the next model up or the current model for free, that's a good deal. But if you don't have to upgrade your phone, don't. Eliminate expenses. Not everything can be eliminated. Now, the frivolous stuff, I mean, the meme video I did earlier today, number 5, talked about this. Maybe that was 6. Regardless, the one I did for six for that published today, because I'm going to schedule this one for next week. So the one published for 6/15/2023 talks about frivolous expenses or things that we don't need to buy in relation to a functional budget. So if you can truly eliminate expenses, things that you don't need to buy, and actually track your expenses month to month and go back and look at all the stuff you bought that you really didn't need, yes, that will save you money. But that's only saving you money month to month, right? Like 25 bucks here, 30 bucks there. Yes, it adds up. So it'll free up more cash at the end of every month. So you end up with more profit at the end of every month on your personal earned income. But you also need to see that perspective long term or in a bigger picture. So if I save $100 this month, well, that's great. Where's that going to go? If I save $200 the next month, that's great. Where's that going to go? Are those numbers going to be different in the winter or the summer? In the summer, our electricity cost goes up because it gets hot and the AC runs more. So we have a higher electricity cost. So if I can save $300 a month in the winter, that's great. And then continue that into the summer, then that $300 is like extra buffer and padding when the electricity bill goes up. Right. So it's got to be in perspective, both in the short term, month to month for the year, but also the long term, those months where you have, gosh, we don't see them much anymore for a lot of reasons. But if you catch a month with 500 to 1,000 left over at the end of every month, then you can really push that money forward when you're just starting out in your business. Okay. Or push that money forward looking at really long-term investments. So, yeah, that's all I'll say on that. I switched my screens around again. So if you like the content, consider subscribing to my channel and then head over to Facebook and join my group there called Navigate Your Finances. And the link will be in the description. You can also go back and dig into my other playlist. And then you can also find me on Pinterest if you want to see what all I'll be posting upon. And then I end every episode with the same stuff, but because it's true. It's you're the captain of your ship. You have the power to change your life and your financial future. Many people will offer to help you, but only you can make the choice to do it. Make it happen. Shock your world. If you could have already done it, like if it would have happened on its own, it would have already happened. So being that it hasn't happened, being that you are not financially free and that you are still evaluating strategy, which if my wife and I work to a point and it's going to be work, right? We're going to have to make it happen. So if we work to a point where we are financially free based on our terms, we're still going to be learning and still going to be adapting strategy because the journey never ends. We might actually reach the X marks the spot on the map, but the game is still going. right? We're still sailing. So if you ever reach the spot, you're still going to have to do strategy, but you're going to have to make it happen because if it could have happened, it would have happened already. If it could happen on its own, it would have happened already. Since it's not going to happen on its own, you're going to have to fight your way to financial freedom, which means you're going to have to make it happen. The shock your world part is if you and I are on a journey, which I'm on a journey, you are too. But if we are both on a financial freedom journey, we're doing something very counterculture. Culture says, wait till you're 65 plus to retire. We don't want to do that. And you don't want to do that. So make some progress, right? See some change. And then when you talk with your friends, talk with your colleagues about what you're doing, and you shock them with the progress you make, right? Shock your world, show them what you're doing, and inspire somebody else, and then help the next person accomplish financial freedom. So make it happen. Shock your world. This is Daniel Young signing off. I will see y'all on the next video. Bye bye.